To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
So let's see what is the exemption that we have applicable in respect of gratuity given by section 10, clause 10. What is gratuity? See, gratuity is the amount which could be a lump sum received by the employee at the time of his resignation or retirement, or received by the legal heirs of the employee received at the time of death of the employee. So, prima facie, we have the employer, we have the employee, and the employer is supposed to pay as per the terms of the contract of employment either at the time of retirement or resignation or death to the employee or the legal heirs of the employee. Now, some employers, of course, they do it themselves. Some employers might take the support of a fund. So, every year during the period of employment, the employer is transferring a certain amount to the fund, and at the time of retirement, resignation, death, the fund will transfer the money to the employee. Having said that, now I want to know, what does section 10.10 say? To understand this section, let's put the concept aside and let's bifurcate into three parts. On the first side, we have all the government employees, employees of local authorities, employees of civil services, and the armed forces included. Now, if these guys receive any death cum retirement gratuity, what is death cum retirement? Either in the case of death or in the case of retirement, if these guys receive any kind of gratuity, it is fully exempt. Meaning to say, no part of the gratuity received by the employees of government, by the so-called employees of local authorities, by the employees of civil services, by the armed forces will be taxable. No part will be everything is fully exempt. So let's keep them to one side. On the other hand, we have other employees, and these other employees we will bifurcate into two parts. Okay, remember, on one side we have these four, on one side others. This others we are bifurcating into two parts. One, those who are covered by the Payment of Gratuity Act. And guess what the final category is? Those who are not covered by the Payment of Gratuity Act. So, let's talk about these two. Those who are covered by the Payment of Gratuity Act, what is the exemption available to them? The exemption available to them is the lower of 1, 2, 3. 1, the amount received. Remember, exemption can never exceed the amount received. Let's say the amount of gratuity received is 4 lakhs. The maximum exemption that can be given under the Income Tax Act is also 4 lakhs. So, exemption is the lower of number 1, the amount received. Number 2, a statutory limit of 20 lakhs. Statutory limit of 20 lakhs. And number 3, I'll come to this later on, keep this in hold. Let's see on this side, for those employees who are not covered by the Payment of Gratuity Act. Here also the limit is lower of number 1, actual gratuity received. Hey, same as second category. Number 2, statutory limit of 20 lakhs. Here also it's same as second category. Third, keep this on hold. Now, only the third part differs for both these categories. On this side, for Payment of Gratuity Act, for those employees who are covered by Payment of Gratuity Act, the third limit is 15/26 into last drawn salary into completed years of service and part thereof. Whereas for the others, that is those employees who are not covered by the Payment of Gratuity Act, instead of 15/26, we have 1/2. Instead of last drawn salary, we have average salary. Instead of completed years of service and part thereof, we have only completed years of service. Are you understanding? Those employees who are covered by the Payment of Gratuity Act have a small edge over the others. Acha, you tell me which is bigger, 15/26 or 1/2? Calculate and tell me. 1 by 2 I know is 0.5. What is 15 by 26? Is it greater than 0.5 or less than 0.5? Obviously greater than 0.5. Correct or not? 15 by 30 would have been 0.5. So if the denominator reduces, what happens? So they get a benefit. 15 by 26 is better than 1 by 2. Acha, tell me which is better in a normal escalating economy like India? Is the last drawn salary a better way of giving exemption, or is average salary? So what do you mean by average salary? Average salary is nothing but the average of 10 months preceding the date of retirement. The 10 months preceding the month of retirement. So let us say you had retired on 15th January. 15th January. So what are the 10 months preceding that date? January you leave. January completely you leave. What are the 10 months preceding that? December, go backwards up to March. So March, April, May, June, July, August, September, October, November, and then December. These are the 10 months. So you have to find out the average salary. But you tell me one thing. Which is better, last drawn salary or average salary in an escalating economy? Obviously in an escalating economy, the last drawn salary generally tends to be higher or could be equal to the average salary. Acha, and what is the third part? Into completed years of service for those employees covered by Payment of Gratuity Act, and into only completed years of service without that part which is here. What is the part here? Completed years of service and part thereof. Let me give one small example. Let us say an employee worked for 15 years, 7 months. Achha, if he was covered by Payment of Gratuity Act, what would you have said? Or part thereof means if he is worked for a period of 6 months or more, then you will round up. So because he is worked for 15 years and 7 months, you will consider it as 16 years. So 15 years and 7 months becomes 16 years. Whereas for those who are not covered by the Payment of Gratuity Act, if he is worked for 15 years and 7 months, what is the completed years of service? Only 15 years. So understand the two limits. In Payment of Gratuity Act, 3 limits are: number 1, actual gratuity received; number 2, 20 lakhs; number 3, 15 by 26 into last drawn salary into the completed years of service and part thereof. Whereas for those employees who are not covered by Payment of Gratuity Act, here limit is lower of: number 1, actual gratuity received; number 2, 20 lakhs; number 3, 1 by 2 into average salary into completed years of service. Having said that, in both the cases we have used the term salary. In one place we have used the term last drawn salary. What is salary here? What is salary here? Salary here is nothing but basic salary plus the entire DA, the entire dearness allowance, whether or not it is forming part of salary. Whether or not it is forming part of salary. Whereas, what is salary for the purpose of those employees not covered by the Payment of Gratuity Act? Basic salary plus DA star. What is DA star? We learnt earlier. DA, which is forming part of salary for the purpose of calculating retirement benefits, plus percentage commission. That means this definition of salary is the same as what we learned for the purpose of HRA. Remember section 10, 13A? We learned salary is equal to basic plus DA star, that is DA forming part of salary, plus percentage commission. Having said that, one more small point before we go forward. See, employees are of two kinds. They could be time rated or piece rated. You would have learnt in costing. What is time rated employee? We pay them salaries for the time, and no matter how much they work in that period, they get the same salary. Correct or not? So generally white collar jobs are all time rated, 10 to 5. you get 25,000. This is time rated, no matter how much work is completed during the day. Whereas piece rated is generally used for manufacturing sector where the output also is considered. So they can tell an employee, depending upon the number of units of output produced by you into so many rupees, you will get your total salary. Now tell me one thing, if the employee wants to get higher exemption, if he wants to get higher exemption, let us say he is covered by the Payment of Gratuity Act, correct? What is the limit? First limit, actual gratuity received. Second, 10 lakhs. Third, 15 by 26 into last drawn salary. That means to get higher exemption in the last month before he retires or before he resigns, he will work extra. He will work extra because he is a piece rated labor, no? Correct or not? Now, that's why the law also says, Baba, for piece rated employees, we will not take last drawn salary. We will take the average salary of the last 3 months. We will take the average salary of the last 3 months. Now you might ask, so what? Now instead of working for last 1 month, he will work for the last 3 months. That's all, no? Acha, tell me one thing. You have your exams when? Either in May or in November. When do you start working hard? You know exams are in May. But when will you start working hard? Will you start working hard 3 months in advance, 4 months in advance, give it 16, 17, 18 hours per day? Or will you first look this side, that side, understand, Arey, others are also not working, exams are coming, nobody is bothered, why should I be bothered? Then you will go for classes. 2-3 months before, you will still be in classes. Correct or not? So some of you will actually start auditing me only. Arey, let's see whether what Varun sir has taught is correct or not. Let's compare it with other classes. Please, even this employee is like you only. 1 month he will work extremely hard to get exemption. But 3 months before exam for you and 3 months average to maintain is a very difficult thing to do. So let's not try to go against our common understanding. Our understanding now is what? In case of piece rated labor, instead of taking last drawn salary, we will take average salary. समझ में आ गया? चलो, now let's compile the whole thing together.